In this chapter, we're going to talk about identifying trend. If you remember, we've talked about day traders versus scalpers versus swing traders. Each one of those traders still needs to identify trend. The difference is the time frame that they're looking at the trend. So for any type of trading, knowing how to read trend using the indicators that I've been explaining already today is crucial. It's vital. So here, we're looking at 3 days. Here you see a period separator here and here and here, right? So we're looking at day 1, day 2, and if you look at the date on the bottom, see how it says 18th to 19th? This looks like this would be Thursday, this is Friday, this is Sunday into Monday. So that's what we're looking at here, Thursday, Friday, Monday, right? From Thursday to Monday, and again, the market does close right there, but look, there's no gap or anything like I've been telling you guys. So we have our days, then we have our weekend where the market closes for a little bit and then it opens up on Monday. Notice how the trend really started here on Thursday. How do we know that though? Not only just because price moved lower, but it's also because the EMAs started to fan out and you started to see them stay in trend. Now, what does in trend look like for EMAs? For me, we like to see them in what we would call full trend. Full trend in a situation like this on a downtrend would be 800 EMA on top, the dark blue line above, then your 200 EMA underneath that. Think about it. If we're in full trend, the highest, heaviest period, the 800 period moving average is on top. You wouldn't want a shorter term EMA above that to then say it's in trend. That would not mean that it's in a downtrend. The fact that the 200 is underneath the 800 means that it's headed towards full trend. So basically, you want the 800 on top, then the 200, and then the 50 underneath that. The 8 and the 21 don't matter as much when you're looking at it that bigger picture because they're short term. They can move up as a short term pullback as it does here, but then that trend can continue into the next day. So it's really those 3 EMAs on the 15-minute time frame that tell us where is the trend from the higher time frame down to the lower time frame. Now, these EMAs are applicable across every time frame. So you'll have 1 minute 800 EMAs, you'll have or an 800 EMA, you'll have a 5-minute 800 EMA, a 15-minute 800 EMA, because that EMA, the moving average, is calculated as a period. Each period is then based on the time frame that you're looking at. So write this down as a little cheat sheet. When we're looking at the 15-minute chart, a very important moving average is going to be the light blue on my chart, 50 EMA. If you were to then go to the 1 minute, which we do get into as I teach you the D1 and D2 entries, you need the 15-minute and the 1 minute to take those trades. You have to understand that the 15-minute 50, I'll write this down, 15-minute 50 equals the 1 minute 800 EMA. It's the same level, but because you're going from 2 different time frames, it's a different EMA. So again, 15-minute 50 is the 1 minute 800 moving average. That's really the most important one as far as cheat sheet. Now, you can always find the 15-minute red 21 EMA. That's roughly the same thing as the 1 minute 200 EMA. And as you trade more and get more experience, your brain will start to process that. It's not a must know, but it does make it a lot easier to understand what are these moving averages. They're the key levels. That doesn't change across time frames. What changes is the color of the moving average. So just understand the reason why I've got all 5 on one chart, as I said, is so we don't have to go clicking through a bunch of time frames to identify which trend we're trading. Now, if the EMAs are coming together, where your 50 EMA is above the 200 and the 200 is below that, and then you have the 800 above that, they're not in that full trending order, 800 on top, then 50, that is normally a sign that you're not in full trend. So when we're buying it, we want the 800 on bottom, then the 200 above that in order, counting down, so to speak, going up to find that full uptrend. Then if we're selling it, we want the heaviest EMA on top, followed by the weaker EMAs underneath that, the shorter term EMAs under that. Because what it's saying is higher time frame is short biased if it's on top, next higher time frame is also short biased, next higher time frame is also short biased. That's a trend. Versus if they're all jumbled up or all very close together, there's no trend there. So that's how we do our analysis on the 15-minute. When we go down and we want to dive deeper, so to speak, into top-down analysis, because I know everybody talks about that, it's not something that I'm a big fan of because I think you overcomplicate the trading. What I do for my top-down analysis is this 3-step process. It's very simple. I only use 3 time frames. 3 time frames because if 2 of them agree, 1 of them disagrees, I can still side with the 2. You get the majority. Versus if I was looking at 4 time frames, 2 agree, 2 disagree, what progress did we make? Nothing, right? So 3 time frames, 1 hour, 4 hour, and the daily. When I get to the higher time frames, 1 hour, 4 hour, or daily, I don't turn them off on my screen, but you should as you start. When you get more experience, you won't need to. But I turn off in my mind the 50, the 200, and the 800 EMAs. They don't matter to me on the higher time frames. They're so slow. An 800 EMA might not move much over weeks on a daily time frame because it's slow. You're talking about an 800-day moving average. Incredibly slow. I could make so much money short term when that thing barely moves. So we remove those 3 higher time frame EMAs and we focus only on the 8 and the 21. Then that's our price action. Then we use market sentiment on the TDI, the yellow line on the TDI, to confirm or deny the trend that price action is telling us. So if the 8 EMA is above the 21, here's your 8, here's your 21, price action is moving up like this. That's terrible drawing, but that's what we're looking at. That would be in an uptrend. 8 EMA yellow above 21, price action either moving on the 8 or on the 21, but moving higher. If we see that on the 1 hour and we look at the 1 hour TDI and the yellow line of the TDI is also above the 50 value, that would confirm price action is in a bullish trend. TDI, market sentiment, is also bullish. That would mean the 1 hour time frame is bullish. Boom, give it a B. Then we go to the 4 hour. Let's say the 4 hour price action is also bullish. Price is on, let's just say the 21. 21 is underneath the 8, so it's still in that uptrend. 8 is above the 21, lower time frame above higher time frame EMA. That's a short-term uptrend. And there, let's say the TDI wasn't in the buy zone. What the yellow market sentiment line was not above a 50. Let's say it was below. That would be indecisive. So I would mark that as an I, indecisive on the 4 hour. 1 hour, bullish, 4 hour, indecisive. Then we go to the daily. And let's say the daily looks just like the 1 hour. Price action is bullish. TDI is also bullish. We give that a B. Go back to what I said in step 1. Use 2. That would mean we're bullish. This indecisive one, sorry, you lost out. 2 out of 3 say we're bullish, so we're bullish. That's then how we identify the higher time frame trend. That only will come if you have the potential for a 15-minute setup. If the 15-minute setup is bearish and you're looking to sell it, but all the higher time frames are bullish and that says to buy it, that's where we run into some indecision, and that can decrease the probabilities of that trade. Now, vice versa, if we're bullish and we're on the 15-minute looking to buy it, fantastic. Higher time frame trend is in our direction. We have our bias on the 15-minute, or if you're trading a swing trade, maybe you're doing it on the 1 hour chart. And now you have higher time frame confirmation. So you feel even more probabilistic, more likely that your setup is going to be a winner. And that's simply put how you identify trend, using the EMAs, using the market sentiment line, and doing it in a top-down analysis form using 3 higher time frames. Don't overcomplicate this. If you're doing day trades, the 15-minute is going to be where you look to place most of your trades. If you're using a swing trading strategy, if you want to swing trade the ASFX entries, you can do that. You won't need the 15-minute. You're going to go to the 1 hour and the 4 hour. Don't overcomplicate it. Use the 8 and 21 EMAs, as I say in step 2, right here, and use the market sentiment line on the TDI. Those 2 things, the EMAs and the market sentiment line, if they're in the same direction, great. If they disagree, it's indecisive, and that indecision lowers the probabilities of you having a winning trade. So that's how you read trend. Now, we're going to talk about how to draw support and resistance.